cloud. So
Right.
now we're recording twice. Okay, Frankie, I'm gonna let Janique Campa in, and it is 7:03. So let's kick this off. Today we're gonna go over some stats, and that's all about Mr. Frankie Valley and all these other. Oh, we even have Charles Swanberg coming in. Keith Andrews, Charles Swanberg, let's go.
All the big wigs.
I know. So I'll just do a quick intro. Thank you, everybody who joined us this morning. We are the eXp Industrial. We used to be the Industrial Logistics Committee, and I think they've just shortened that to the Industrial Committee, but I'm so used to saying logistics in the middle of there. That's me, myself, Pamela Jungi, Frankie Valley, and Blair Gilbert. And our job, or what we're here to do, is to help educate and mentor in the industrial sector of commercial real estate, whatever that looks like. And so, how we help facilitate that is every 2 weeks, we get together on this Zoom, and sometimes we have guest speakers on that are specialized in industrial real estate, any facet, whether it's, ground up, build up, or massive portfolios, or even the different sectors of industrial distribution, manufacturing, so on and so forth. And we'll have a speaker, or we'll just go into a deep dive of stats from coast to coast, and look at the different market reports. And so that is what we're doing today. We are doing a stats session. And with that, I always turn it over to Frankie Valley. And please don't be afraid to participate, ask questions, raise your hand, unmute your mic, and jump on in, because the more questions we ask and the deeper we dive, I think the better the experience and the more we learn. So with that, good morning, Frankie.
Thank you, Miss Pamela. Good morning, everybody. Yes, like she said, please engage, intervene. Please ask questions. This is all about, helping you guys as much as possible. We look at stats all day long. We just want to provide as much information as knowledge to support you guys as much as possible. So we're just going to go with some reports that I found. And if there's anything specific you guys want to see, please let us know. Obviously we have Moody's Analytics that's provided by us through eXp Commercial that we can use. And we also have CoStar and all these other sites that we can utilize. Whether you're a huge fan of the market stats or not, it's always good to have some base level knowledge of what's going on, what the experts, as they like to call themselves, see where things are going, and at least to have a general thumb on the pulse of what's being reported, right? So without further ado, I will share my screen, and I'll also throw this in the chat box for everybody to download if they wanted. Let's see here. There we go. That get in there? Yeah, there we go. So I just put a report that I'm going to pull up on my screen for you guys in the chat bar, just if you guys wanted to put it up on your own screen.
And then you also have screen sharing privileges, Frankie.
Beautiful. And let me know when we can see it.
We can see it.
Beautiful. Awesome. So this is a market report provided by Colliers. eXp Commercial hasn't gotten to the point where we're putting our own reports quite yet. But it's good to look at the different companies' reports. You never want to just look at one source. A lot of them use just their inventory. A lot of them use a minimum of square footages, of sales price. So you want to make sure you're always taking that into consideration when you are looking at specific comps. This is a much more general overall United States National Industrial Q1 of 2024 report. Excuse me. So we will go through it, and if you guys have any questions, please reach out, and we'll get any questions answered, and we will go to Vegas or um any other markets that you guys want to look at. So without further ado, first off, you guys can see there's the key takeaways. So the key takeaways for this report are construction completions were more than 4 times higher than tenant demands in Q1, pushing vacancy higher for the 6th consecutive quarter. Limited starts resulted in the total space under construction falling below 400 million square feet for the first time since early 2021. Rental rates continue to climb overall, although there are contracting in some West Coast markets. Definitely, the increase in growth has definitely slowed. Vacancy rate is up to 6.08%. For Q1, net absorption is just under 28 million square feet. Currently under 385 million square feet under construction. And the overall asking rent is $10.71 per square foot per year, which is about 90 cents a square foot per month, which is going to be on, as you see, the net, triple net basis. So that is in addition to CAMs, operating expenses, utilities, anything else that is involved with the lease. Some general market indicators. Unemployment rates at 3.8%. GDP quarterly change year over year is 1.64. The Treasury note is 4.192%. And it shows you the quarter over quarter from 2024 Q1 to 2023 Q4 and 2023 Q1 as well. So you can see it went from 3.99 up to 5.5 to 6%. Same thing you can see for net absorption, the year-to-date net absorption, new supply, year-to-date new supply, under construction, and the overall asking rate. Jumping, obviously we all know how hot industrial's been the last several years, but even just still in the last several quarters, it's been increasing still pretty significantly in comparison to other asset classes. The largest new occupancies, and just to a quick jump, so we're not just bored to death by stats, you guys. A good thing to use with this is not just to fill your brain with random stuff, right? They're talking points when you're having conversations with other brokers, you're talking to your clients about the market. Some people don't care. Some people are much more analytical and they want to hear everything that you have to say about the market. These are also good opportunities to make videos. You can do looms. You can even just you can just cite a source from this. You can say, this morning doing my industrial research, I noticed this report, cite it, put the link if you want. I always like to do that. You don't have to. And just say, the net absorption was this, the biggest occupancy. Like there's all sorts of little video ideas. You could do little mini series of the largest occupancy, the smallest occupancy. There's all sorts of little ideas like that if social media videos was something that you guys were interested in. Just wanted to throw it out there. And as you can see, that you got the charts, you got all the different graphs for those analytics people who are interested. They do a 5-year forecast as well, or excuse me, it looks like a year forecast as well on those. We can look at the top industrial markets per net absorption, properties under construction, or square feet under construction, the fastest growing under construction as a percent of inventory, and total inventory and vacancy rate year over year change. So as you can see, we got Chicago, Phoenix, Boston, Austin, Atlanta, between 2.5 and 5.5 million square feet of net absorption in 2021 Q1 of 2024. Phoenix, LA, Dallas, Atlanta, and Houston led the under construction in Q4 2023. Fastest growing markets, Savannah, Austin, New Hampshire markets, Phoenix, and Norfolk. total inventory and vacancy rate, LA, Chicago, Dallas, Fort Worth, New York City, Atlanta. Obviously, it gives the dots of where they're all at and where they're located. Again, just could be another good talking point, videos, whatever you think. Industrial overview by the regions. Again, another good source of statistical knowledge to have as a talking point or whatever you like. West, Midwest, South, Northeast, and the US overall. Breaks it down by vacancy rate, the year-over-year change, net absorption, again, year-to-date new supply, under construction, warehouse and distribution rent, and industrial inventory. All of these are good information for you guys to know, especially the rent and inventory. You got to know what's available, especially in your market, and how much it's going to cost on average, right? And historically, what have things cost? It's good to know by region, and more specifically, you want to know by your market and your submarkets, right? Here's a little graph and some snippets on the vacancy. Strong new supply and a drop in tenant demand pushed the U.S. average vacancy up 50 basis points to 6.1, the highest since first quarter of 2015. So like we said, as we can see, the demand has definitely slowed in growth, but we're still fairly strong, at least in my opinion. In Vegas, definitely specifically, we're still going very strong and optimistic as far as the market's concerned. But the 15-year average is at 6.4%. As you can see, they got down to 3.6% here and then a high of 9.3. So, 3% and 9% vacancy rate between the last since 2008. It's not too shabby. Much higher in other asset classes. New supply and net absorption shows the different new supply in comparison to the net absorption on this with the forecast, a very modest forecast. New supply totaling 120 million square feet, the 8th quarter in a row. Construction net completions exceeded 100 million square feet. I'm going to say that again. That's pretty awesome. New supply totaled 120 million square feet in the 8th quarter in a row. That completions exceeded 100 million. So 100 million square foot per quarter, 8 quarters in a row. That's pretty awesome. That's almost 1 billion square feet in 2 years. Meanwhile, demand has measured by net absorption totaled only 28 million square feet, the lowest quarterly total in over a decade, 45% below last quarter's total of 50 million square feet. New leasing activity, particularly for big box buildings, picked up during the first quarter, which will translate to an uptick in net absorption as these tenants take occupancy in later 2024. Yep, that's definitely another thing to take into consideration. The commercial market moves a lot slower in comparison with residential. You have 30-day closes. With these take a lot longer to build up. They lease, then they sell, and then by the time they get reported, and it's a lot slower for information to transfer hands and get to the desired parties to give us this information. But the big box ones are especially tricky because you build 2 million square feet of something that could get leased up by 2 or 3 tenants potentially, and that could be on the market for this long. But by the end of the year, they needed to make a tax move, and then all of it was leased. So in quarter 4 to quarter 1, it went from that 2 million being 0 absorption to completely absorbed. Can make a significant difference. Rental rates, probably one of the more significant ones. Average weighted rents increased to $10.74, triple net, 10% year-over-year increase. Warehouse and distribution rents saw a slightly greater bump of 13% over the past year to $10.01 per square foot, triple net. So obviously they break it down into subcategories of industrial. Usually they have it clearly described. Each one, of course, again, has their own little different definitions, and how they break it down sometimes is different depending on the information they have. Following 2 years of unprecedented rent growth, often exceeding 20%, it has stabilized in most markets at between 5 and 15%. Rates have contracted over the past year in a few West Coast markets where rent growth had gotten a bit out of hand. Most definitely. Rent growth is expected to normalize near historical averages of 4 to 7% over the next 3 years. You know, it's not a bad thing to advise your clients of, right? I mean, obviously we know what the historical averages and the standards are for increases and all that good stuff, but 7%, that's up there. Industrial and economic outlook shows you the GDP annual change quarter over quarter, the US Treasury note, and the US employment rate. All good sources of information just to know and understand. The Fed funds interest rate and inflation rate side by side chart comparison. Odds of a recession continue to fall as well, dropping below 30%, according to most economists, after being as high as 63% in October 2022. Anything from an economist is tricky because it just depends on what kind of economist they are, what kind of market they're viewing. It's definitely more of a macro perspective. Despite these positive developments, the economy still appears headed for a slowdown, with fewer Fed interest rate cuts now expected in 2024. Yep, control what you can control, guys. There's going to be lots of transactions. The U.S. industrial market has responded to the economy. Owners, tenants, and developers have all become more cautious as the cost of borrowing has increased, and near-term uncertainty continues. Demand as measured by net absorption totaled more than 100 million square feet per quarter during all of 2021 and 2022, but has averagely only 44 million during the past 4 quarters. New construction starts are expected to average less than 30 million square feet per quarter each through the end of 2024, resulting in the total space under construction nationwide falling below 300 million square feet by the 4th quarter. And here we have the industrial statistics, inventory, new supply, and under construction, broken down by Midwest regions, and as well as the Northeast, South region, and the West region. So as you can see, it breaks it down: Chicago, Cincinnati, Cleveland, all of these big markets. If there's any particular one to look at, please let us know. There we go. Well, I knew it was going to be somewhere. Las Vegas, baby, made the mark. 24 quarter one inventory, 169 million square feet, 5.7 million of new supply year to date. Same thing. And under construction, we have 10.8 million square feet under construction. Lots of opportunity in Vegas. Wow, Phoenix makes it look like a peanut. 33 million, 413 million. There's Las Vegas again. Net absorption, vacancy rates. You know, there's all the stats anybody could ever want out there, you guys. You could make your brain go numb from looking at stats if you wanted to. Here's the goods right here. Direct asking rents, triple net rents, manufacturing space, flex/service space, warehouse/distribution space. Again, another great talking point. When you're talking to your client, it's going to depend on what type of space you're looking at when you're quoting them, right? Some people have no idea. It could be their first space, could be the first space in this market. So you're going to want to get as specific as possible. You know, the more knowledge you have, the better. It never hurts. Especially if they're comparing, you know, Las Vegas to Phoenix to Kansas City to wherever. You know, everybody's going to run into potential clients that say, you know, we're looking at a couple different markets to expand into. We need to compare numbers and see which market we want to go into. We had that with a 100,000 square foot client that ended up going into Arizona, unfortunately, and didn't come into Vegas. But, you know, we did all of this, provided the reports per asset class, per submarket, per subtype. So definitely comes in handy. knowing all of those differences. Industrial stats, direct asking rents again. You can see it's still a pretty wide range. This is on a yearly basis. And that is it. And here are the gentlemen who, or the lady and gentleman who provided this report via Colliers. If you have any corrections you want to send them, I'm sure they'd be thrilled. And is there anybody's market that they want to look at specifically? I have a Vegas report ready. If not, let me see. I don't think anybody posted in the chat. Nope. All right. Well, then Vegas it is. There we go. Okay. Just gonna throw this in there for you guys. Cool. Just in case you guys want to follow along on your own computer. But here, excuse the Collier's repetition. I have JLL, Avison, I have all of the other ones downloaded. These are just at the top. So in Las Vegas, 2024 quarter one, key takeaways. Net absorption was roughly 2 million square feet in 2024 quarter one. Vacancy increased to 4.8%. Asking rates decreased to $1.12 per square foot per month on a triple net basis. Vacancy is 4.8. Under construction is 11 million. We already said those other two. Southern Nevada's industrial market added 5.74 million square feet to inventory in the first quarter of 2024. And absorption was 2 million square feet, down from 1 quarter ago and 1 year ago. Industrial vacancy increased to 4.8%. And that is just reiterating what it just says up there. Market indicator, 6.74% unemployment rate. GDP quarterly change, 2.85. And the 4.1 Treasury note is the same as the others. Historic comparison, quarter over quarter, total inventory, new supply, net absorption, total vacancy, under construction, and asking rents. Again, we're slowing down. That's a big jump down right there, but going from, we were at 60 cents 5 years ago, 70 cents 5 years ago. So almost doubled. And remember, guys, this is on the average, right? So there is definitely properties that are being leased at a lot higher and a lot lower rates. We're seeing 130, 140 a square foot for some higher end industrial spaces. And, on the outskirts and the outer submarkets, you can potentially even still get things sub $1, right? Maybe even sub 85 cents if it's far enough outside of Vegas. These are other great ones to know, especially for your local market. Large recent transactions, Nexus lease, or RT Guild, something, whatever that is, leased 4490 Nexus, 87,000 square feet. NFL leased 67,000 square feet. Dupree, DAC Realty Group, e-commerce innovations, that little arrow thing. So those are some of the larger transactions that has happened more recently. Beginning this quarter, the definition, and here's an interesting note. So beginning this quarter, the definition for warehouse/distribution space has been changed. The ever-changing market of commercial real estate has changed to buildings with dock-high loading doors that have bay sizes of at least 50,000 square feet. Buildings not meeting this definition have been reclassified as light distribution. Good. Got to know this stuff, especially if you're in the developing world where you got to deal with zoning, permits, highest and best use, zone changes, things of that nature. Obviously, the zoning is going to depend on what you can build. Employment, construction, vacancy versus the rents, employment growth by sector. You have the logistics, manufacturing, construction, wholesale, natural resources, not looking very good. Vacancy versus the rents, quarter over quarter with the asking rents.
Hey, Frankie, you think that 50,000 square foot bay spacing is realistic?
Thought that was extremely high.
I think that's a typo. It should be 5,000.
I hope
What do you
so, because
think,
I was,
Blair? That's
yeah,
crazy.
that's a great catch because I was a little confused. I'm like, I don't know that many in Vegas. That's especially if it's a Vegas thing or if that's a nationwide thing. But yeah, might have to fact check them on that. It might be corrected in the at the bottom of the report. We'll see. And net absorption, we talked about that, and then it obviously breaks it down: wholesale, manufacturing, business services. Here is the development schedule. This is always fun to look at. Quarter two of 2024, as you can see, 5.1 million square feet. 30% of that's already pre-leased. All across Vegas in the different submarkets: North Las Vegas, Southwest, Apex. Under construction right now. For quarter three, we have another 3 million. That's 6% leased. And quarter four, another 3.1 through just under 3.2 million. That's 12% leased. Yep. You know, it's funny because there's really not a lot of projects here if you really think about it. It's definitely manageable. Like you could have a pretty good understanding of this, Vegas size market isn't too large. We're definitely getting there, but it's not something that's overwhelming that there's no way of tracking it all. We have a pretty good idea of everything that's going on in our industrial market in Vegas. There's 10, 15, 20 developments going on per quarter, give or take. So it's not like there's 100 or 50 and you just got to know what you know and, do your best with the rest. Like you can actually have an understanding of each one of these, especially the ones with nicknames. And quarter one of 2025, we got 4.7 million square feet projected, and 8.4% of that is leased. And that is just one project that's under 400,000 square feet that's completely leased already, and everything else is yet to be. Vacancy and rents, vacancy increased to 4.8, which is pretty high overall. We were sitting at 3, at least a couple months ago. Seems like it jumped up pretty high. East Las Vegas had the lowest, 0.8%. There's also on the highest is 20% in Apex. They're going gangbusters. That's where all of the half a million square feet projects, not all, but a majority of them are. From last quarter's $1.28, we went over that actually already. Annual rent growth's negative 7.4% from last year. Okay, so per asset class or per subtype, 0.9, 5.9, 3.9% for incubator, 13% for flex properties, still strong in the flex world. Industrial construction. This is just showing it to you guys in a graph of what we were just looking at up there. Breaks it down between the under construction, the active developments, and the planned constructions. Shows a good map. Sales activity. As you guys may have remember, we have a project that's sitting right here off of Volunteer and Inspirata. 29 industrial flex condos. Very versatile project with the clubhouse, completely gated, rooftop deck on the clubhouse, unobstructed views of the Strip and the Red Rock Mountain range. It's going to be pretty slick. Actually breaking ground next week, finally confirmed, July 15th. We got 5 or 6 in escrow and a couple more under contract, but definitely still got some availability if you guys are interested. If anybody's looking to buy something in Vegas as a luxury type investment, or if they're looking to lease to a qualified business, we're quoting around 6% cap rates. Breaks this down, shows you guys the buyers, the location, the type, the size, and the price. 49.6 million for a 208,000 square foot warehouse. Caprock Spanish Ridge is the biggest one we have here, which is, that's pretty close to our office, actually. We're right here, Pam and I. Investment sales volume versus price per square foot. So this is always a fun chart to look at. It shows you price per square foot, quarter over quarter, in comparison to the sales volume. Which is in the millions. So here is that glossary type. Let's double check that. Warehouse distribution buildings with dock high loading doors may have the size of have to have the size of at least 50,000 square feet. And then light distribution, 50,000 square feet or smaller. Huh. I kind of flabbergasted, but you know, good for them. They're changing words and definitions. Must be based off of some, projections and a need for that additional subcategory. So I guess they just changed it to accommodate the dock high loading doors that we have with at least 50,000 square feet. And that definitely has been more of a trend in the last couple of years. It's just not something that we have in excess. But gives you the breakdowns in sales. Industrial sales volume this quarter was 109 million in 15 transactions, totaling 518,000 square feet at an average sales price of $210 a square foot. This was comparable to sales volume one quarter and 1 year ago, about a third of the volume seen in the second and third quarters of 2023. Average cap rate for industrial sales this quarter was 5.7%. Vegas has always traditionally been a 5 to 7% cap rate market across any asset class and everything. We've definitely been seeing fours and five, the low fours and low fives of late, of more of the single tenant retail, those type of deals for sure. But the industrial assets, strong 5.56% caps. And the owner user sales volume to date was 34 million in 13 different sales, totaling 164,000 square feet. Average price of $211 per square foot, which is interesting. Owner users are, paying a lot more than that for spaces in Vegas, closer to 250, 260 a square foot. In the heart of Vegas, I should say, specifically Southwest, Henderson, and the better parts. The forecast for the industrial market is uncertain. Wow, somebody who's honest. Well, that's refreshing. It is uncertain. 2024 should see the largest industrial expansion in the Valley's history, continue with as much as 13 to 17 million square feet in completions, with pre-leasing trending downward over the past year. This should also mean higher vacancy rates and potentially downward pressure on asking rental rates. It's definitely about time. I mean, there was a time when we couldn't pre-lease things fast enough. I mean, as soon as they would put something on the market, doesn't matter what, 100,000, 10,000, 500,000 square feet, it was being pre-leased before they broke ground. So it's nice to see a little stabilization. Well, one could characterize this increase in vacant industrial space as a problem, it is also an opportunity, providing large, contiguous, speculative spaces for companies with an immediate need for such space. Of greater worthy is the rapid increasing in vacant sublease space experienced over the past 2 quarters. This kind of expansion of vacant sublease space could foresage. Okay, Pam, you're going to have to help me out. Is that foresaw? Is that past tense? What did we got there? Foresage softer demand for the industrial space in the future. Maybe, is that a typo? Foresaw? Foresage?
No, it's French.
Is it French?
No, I don't know. Maybe that's the same word check with the 50,000 square foot base spacing.
Maybe. But it's always good to brush up on the glossary. You never know when they're going to change stuff, right? Flex buildings without a dock high loading door with parking ratios in excess of 3.5 per thousand. incubator, light distribution, light industrial. I'm sure you guys don't want me to read them all. Construction definitions. This is just more so you understand this document. Under construction, active development, planned construction. And then general definitions: direct lease, sublease, net absorption, direct availability rate, sublease availability rate, vacancy rates. So if you have any misunderstandings, of course, Google is always a good source to multi-source check other definitions, but this is a great source for commercial real estate definitions as well. Obviously, they're going to break it all down in all the different statistics for you, just like the national one. So we have the subtypes and the submarkets: airport, Apex, East Las Vegas, Henderson, North Las Vegas, Northwest, Southwest, West Central, West Henderson, grand total, and shows the historicals. Shows us the total square feet, the direct availability rate, sublease availability rate, vacancy rate for the previous quarter, the current net absorption, year-to-date net absorption, under construction square feet, deliveries year-to-date, and the average direct asking rate on a triple net basis. So as you guys can see, this one, $1.60, that is definitely on our high end. Let's see, that is 2.4 million square feet in the warehouse distribution subtype in the airport market, excuse me. Apex, still a lot of that is still being developed. Big utility problems. That could be its own Zoom call just about the Apex development. Any questions? Anybody have anything? Any, comments, questions, concerns? That is it. John Stater, Aaron West. You're going to be getting an email from me about this definition and forsage, really. But yep, that's a pretty decent overview. This is definitely top of mind, conversation starters, refresh your memory of what's going on. You should already have a pretty good understanding of what's going on. So this is just to keep you posted, keep you up to date. Anything major changing, making sure nobody's trying to change the past, change the historical data. It's always good to keep your finger on the pulse. So hopefully we can open it up for questions, some sort of conversation, maybe even feedback, whatever you guys want to talk about. It could be non-staff. We can start there.
And I'm looking in the chat and I don't see any questions in the chat. I think you did a really thorough job and that's great. And, I think that also the real gold lies in deciphering this information and helping you making moves in your market, right? Understanding where the opportunities are, understanding where the pitfalls are.
Pam, what's typical triple net costs in your market for industrial?
Leasing, it depends. We've got so many different types of industrial, Charles. I mean, we've got old and dirty industrial in North Las Vegas that you can get for, less than $1 a square foot. And that's
right, but
triple
those
net,
are probably
right?
what like offered on a gross basis. How about the newer stuff? What are they?
You're just asking about the operating expenses of the cams. Yeah, it'll be 15 to 30 cents per square foot.
Okay.
Is a decent range for industrial. Yeah. For example, the new project that we're working on, the management company quoted us 20 cents. Well, they originally quoted us 15, and Pam told them to kick it up because she knew how expansive this project was. It wasn't just a concrete tilt up, right? But they're quoting us 20 cents per square foot, which is on the higher end from what their numbers were at. So that's a brand new project as well. And that's a, class A condo development, 4,000 square feet units. So on the bigger projects, and you can get a little lower, the older ones, we've definitely seen 20s and 30s. But
well, and that's where I was kind of going with it too, is that, our older product is just that down and dirty industrial, your daddy's industrial. This newer product, they're just building it differently. They're even building common areas in there and such that are kicking those cams up higher. So it's super interesting. But yeah, we've got everything across the gamut in Las Vegas. 15 to 30 cents for cams is pretty accurate. What about you, Charles? What are you guys seeing?
Oh, we don't have slot machines in our industrial parks here, so you know. No, I mean, but I would say about the same, you know. But we, you know, down here, Southern California is a weird spot. We offer lease rates at monthly. I think we're the only place in the world in the country that does that.
We
So
kind of
when
do.
I go
We're
outside
like
the
half and
market,
half.
I mean, I always have to divide by 12 and guess, but we're, you know, well, but wait a minute. I mean, even they're talking about, you know, a monthly rate there and that stat we're seeing, but
Yeah, Vegas is another one. We use monthly for the
oh,
most
really,
part.
really? Oh, I didn't know that.
Yeah, but yeah, no, for all other 48 states are pretty much on a yearly basis.
Right? Yeah. And
I always have to change that CoStar filter to monthly. It's like, no, I don't want to look at this annually. Break it down.
yeah,
Exactly.
I'm having to convert myself to talk annually because that's what the rest of the country looks at. But don't you guys think that, you know, when you guys see vacancy rates at 6%, 8%, 7%, whatever, it always seems like the real world is double that, you know. It's like when the stats are saying 6, I'm like going, dude, that was 6 months ago. I don't know where they're coming up with this stuff, you know.
Well,
Oh
and
my
I think
gosh, yeah.
sometimes the information is that old. You know, by
Yeah.
the time it actually gets to a piece of paper and disseminated across the internet, when we're reading it, you know, sometimes it is 6 months old. So yeah, I agree with you.
Oh my gosh, 100%. I think I actually mentioned it. That's, you know, the commercial market, not just the market, but the statistics getting to the brokers and the market people, the economists. It's so slow. Yeah, the information can be so outdated and old by the time we're reading it now, Q1 2024. These numbers could be, you know, 10, 15% off.
Well, here in Tennessee, what we're seeing is a lot of demand for the smaller industrial spaces, like under 100,000, like especially 30 to 60,000 square feet. There's no vacancy in that in that sector, and the major developers are building the big box, you know, like 500,000 square feet and up. And that's where the vacancy is. So that's sitting on the market a little bit longer than in the middle of COVID when transportation logistics was completely messed up. So that peak of the market is not very relevant to look at it because it was just such an exceptional time. The shipping was all messed up, and all the distributors had to you know, put so much inventory to be resilient and that sort of thing.
Gotcha. That's awesome. Thank you for sharing that. I love it.
No, Frankie, I was at a CoStar kind of event not that long ago, and throwing up some stats on just, you know, the net absorption and things. And I asked him, hey, you know, because of the trend, you've got such a mix, like you know, like Pam said regarding some old down and dirty buildings that, you know, could be have ceiling clearances as low as 12, 14 feet. But you know, generally the early 90s stuff that was at 24 clear, with now being the standard of, you know, 30, there's no buildings being built below 32 these days. It seems like 32, 36 feet. That efficiency difference between a lower clear, like a 24-foot clear building, to a 36. I mean, guys can move into smaller square footage buildings and have higher efficiency and be able to put more stuff into the company. It's an expansion. And I asked him, you know, would you ever consider a compensating factor? I mean, you know, like a load factor that they use in office buildings and stuff
For
that,
sure.
you know, is there going to be something in the stats for something like maybe more of a cubic square footage factor?
Right. That's a great point. Because, you know, we even have 10 feet. We have some 10 feet.
Yeah,
It's
right.
crazy. But yeah, that's such a great point because especially over time when, like you said, it's the standard now, it's not going to be any lower end clear heights being built. So once they overtake those older ones, that's a great point. It's
And
going
these
to
guys are
show as
putting,
smaller, but like
right.
you said, they're actually larger. So
Yeah, if you're in a 100,000 square foot, even 28 clear building, and you're moving to like even a 75,000 square foot building that's got 36 clear, with your racking, you could probably have about the same efficiency or higher, right? I mean, and
Right.
because you're taking less square footage, even if the rate is a little bit higher, it probably ends up cheaper.
Yeah, it might be if one way they adapt or accommodate or whatever to that situation. They could also maybe actually no, that wouldn't make sense. Oh no, wait. Would that make sense? No, yeah, no. So I mean, they could. No, sorry, I lost it. That doesn't make sense.
I mean, they could take the extreme and say, hey, I've got a X cubic square foot building, and it ends
Oh,
up being an office building,
right. Sorry,
with no
it came back to
floors.
me. And it could just be it could be like another crucial part of running comps, right? It could be 50,000 square feet sold in the Northwest at 250 square foot with a 30 square foot clear height, or is it all of those things but with a 12-foot clear height? And that might just be one of those big market drivers. Whether it's the 12 feet, it's probably going to be a 20% deficit, where if you have 20 foot plus clear height, you're going to be on the higher end. I don't know, but it's definitely a great point and something we should all be aware of.
Yeah, I mean, maybe they could just use when the building was built kind of as a factor too. I mean, no one's building an 18-foot clear, true distribution building. So
True.
yeah, maybe the way the guy that they were mentioning with light industrial, which is probably more into flex these days, it's getting all blurred.
Right.
And the difference between that and a true distribution building. When they were saying, base spacing of, or whatever, of was it 50,000 square feet? I mean,
50,000 square feet with loading docks.
yeah, that's complete BS. It's, what, 25 by 50 or 50 by 50 is base spacing most. So we're talking 2,500 square feet. I think that was a massive typo, but I could see where they're going with that, with the stats, and saying, hey, we're only considering more modern buildings, right?
Right. I definitely like the adapting and the evolving of it, but it's just got to be a little bit more accurate to the market. But yeah, just I looked at it again and just to make sure I didn't read it wrong, and it says 50,000.
I'm sure Forsage was 4C.
Yeah, okay, I thought so. Yeah, light industrial is the base sizes of at least 3,500. Incubators, anything under 35.
Yeah.
It's weird, yeah.
Yeah, it's a typo.
It's so weird that they go from below 35 and above 35 straight up to below 50 and above 50.
Hey, I've got an industrial class this morning at 10 a.m. our time. So
Yeehaw. Be there or be square.
Maybe I'll talk about base spacing. Very important if you're trying to convert an industrial building to pickleball.
Oh, tell me more. We have 2 pickleball buyers for this stack project we're trying to.
Yeah, I'm not saying it's a fad, but I haven't seen as much people busting down the doors to try to find one. I just think it's economics, how are you gonna make it work, paying that rent? And I mean, I've got a shopping center listing that I just ended up have my team on it, and even gyms, you got the larger 24-hour fitness and the LA fitness and all that stuff, but these gyms like a core power yoga that's typically in like 5,000 feet, they don't even want to take 5,000. We have like gyms and stuff and yoga places that only want 1,800 square feet. And so, they're taking less square footage to do the same thing.
Right. Yeah, absolutely. And people are getting creative. They don't need all that extra space. The work from home hybrid environment aspect of it. People are
Are you-
definitely getting creative and doing more with less.
Are you guys seeing any repurposing of the industrial stuff? I mean, besides pickleball or whatever.
Not on like the grand scale as far as like the RICs, retail to industrial conversions, but definitely office users going into industrial space and even some quasi retail and other asset classes. Definitely the office to industrial has been a huge trend here just because it's literally at one time it was 50% of the out-of-pocket costs for the rent and the cams and everything for a warehouse or an office space. I mean, you just build an office in your warehouse. It's not a big deal. And
Yeah, if you got the parking.
that's
Well, then the other thing
that's
that
the
we are
biggest thing
seeing
for
in
sure.
the other thing that we're seeing in Las Vegas, and this is simply just particular to Las Vegas, is because the city just came out with a new vision. So a lot of our zoning has changed. So we used to have a bunch of older industrial just west of the strip. And a lot of that property now where Allegiant Stadium sits, and there's,
Oh,
it's
right.
right in alignment for all new growth. That's all been rezoned hotel and resort. So we're not seeing it converted, but a lot of it's for sale just to be redeveloped.
So they're scraping the stuff?
You're gonna scrape it because it's just those ceilings are too low. The
Yeah,
dock
it
door,
makes no
there's no
sense.
docks, the doors are too low. It's just not functional anymore. So a lot of those properties will just get scraped.
Are you seeing any true dock high buildings being built in your market, or are they still, putting, kind of truck wells and stuff?
Mostly the Truckwell product, like around Buffalo and 215, wouldn't you say, Frankie? And even in the
Yeah.
Henderson submarket?
Most
I've
definitely.
I've surprisingly seen some actual, well, the way they grade it is very deceiving, but
Mhm.
you almost can't tell. Wait, are we a really true dock high building? Because I didn't walk up any stairs when I went to the front to the office, but you've got, 40 inches of a lip on the other side. So I think they've been getting pretty creative in grading the entire property so you don't have this sudden, truck well at the back of the back of the property. Boy, exciting, huh? Industrial.
Industrial real, it's scintillating. I don't think
Hey.
that's a word, but I
Maybe
like to
I'll
use
talk
it.
about sprinkler head calculations in my class and put everyone to sleep. It's crazy.
Well, hey, everybody that's still on here, you definitely want to jump into Charles's class if you want to dive in and learn more about industrial real estate. And we are at 7:56, and maybe we beat this dead horse to death. What do you guys think?
Most
Is there anything else
definitely.
in closing, Frankie?
I'll just add, Charles's class, it's really great. It takes you guys on a much more micro practical level. He shows you start to finish from LOI to closing all the way through on the tenant side and the buy side. So it's a really great understanding of what to do during the transaction. Whereas obviously we're a little bit more micro, looking at stats, interviewing people, but it's a great synergy. I'm glad we both have different tasks or different meetings, but definitely want to jump in there if you guys haven't. And yeah, thank you all for coming. Appreciate your time. Thanks for the the feedback, the collaboration. Charles, Kamel, appreciate you guys.
Thank you.
All right, everyone, have a great day.
See you guys.
We'll see
Go
you in
sell
2
something.
weeks.
Develop something, lease something, all of the above. Good luck, guys. Happy birthday to America. Spencer Gray joined the waiting room. Hilarious.